Change with the changes in the volume or levels of what here? Activity, or levels of activity, or levels of activity, or levels of activity. Where do we get the book? I should be able to share this book with you then after class through WhatsApp. Through WhatsApp. There are students already who have this book. So we are told, ladies and gentlemen, the most important thing is that under cost volume profit analysis, basically we are monitoring the costs. We shall be monitoring the profits. How are they going to move? Do they increase? Do they do this? As the quantity we produce changes. So cost volume profit analysis. So how will the cost be changing? How will the profit here be changing as the volumes change? If you can remember very well from your section 2, cost volume profit analysis is also what we call break-even analysis. It's also what we call break-even analysis. It's also what we call break-even analysis. Now, ladies and gentlemen, the most important thing you're supposed to know is this point of break-even. If you can recall even from your QA last semester, at the break-even point, profit equals who? Somebody at the break-even point, profit equals who? At the break-even point, profit will always be equal to, it tells me 0, yes. So at the break-even point, ladies and gentlemen, at break-even point, profit equals 0. At break-even point, profit equals 0. At the break-even point, profit equals 0. What I don't know is whether there is any student who is able to remember, ladies and gentlemen, the formula of getting break-even point. Very good. Carol has also come up with a very good approach, saying that at the break-even point, basically, revenue should be equal to cost. Revenue should be equal to cost. Ladies and gentlemen, if you're at a point of remembering this, we know that our profit equals revenue minus what? Profit equals revenue minus cost. And as Carol tells us, if, for example, we generate 10 in form of revenue and the cost is exactly 10, then when you subtract the two, you'll end up getting what here, somebody? 0. So she's right. She's telling us that at the break-even point, profit equals what here? Profit equals 0. At the break-even point, profit equals 0. Profit equals 0. But you haven't yet answered my question. My question was as regards the formula of getting the break-even point. The formula of getting the break-even point. The formula. Kennedy Gay, I like this, but whatever you have given me here will be the total cost, basically, total cost. And I want the formula. I want somebody to give me the formula of getting break-even point. The moment you get the formula of break-even point, for sure, today's dinner will be on me. Today's dinner will be on me. Yeah, you know, systems. Life has been made easier with this technology. And before I lose money for dinner, I would want to write this formula for you before I lose this money. I would want to write this formula for you. Ladies and gentlemen, when they want me to give them break-even point, this is how I do it. I normally write here X break-even, X is quantity. X break-even equals fixed cost over contribution margin. 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 This is the formula of getting the quantity that you're going to sell. How many pens, for instance, do I sell for me to be able to cover all my expenses? Remember, ladies and gentlemen, before business picks up, you're not looking for profits. No. Before your business picks up, what you're looking at the moment will basically be, how do I cover my costs? If I'm able to cover all my costs with internally generated revenue, that is what we are calling what here break-even point. I just generated 0 profit. but I'm at my comfort zone. At least all my expenses can be taken care of by what here? My revenues. My revenues. So anytime we talk of quality to break even, we'll always think about taking the fixed cost of the farm. I hope you have written this in full. Fixed cost of the farm, all over contribution margin. All over contribution margin. And how do I get contribution margin? How do I get contribution margin? How do I get contribution margin? Ladies and gentlemen, how have you been? Have you really been hearing me? Because I can see my mic has been down. I've been hanging a wrong microphone. I hope you have not been straining. Oh, no wonder you weren't able to answer my easy questions correctly, eh? No wonder you missed out on my dinner, isn't it? Oh, great. Ladies and gentlemen, here we are. We are talking about the formula to break even. We are talking about the formula which we can use to get quantity needed for purpose of break even. So it is fixed cost of a contribution margin. And again, remember that for us to be able to get contribution margin, my friends, we normally take the selling price minus the variable cost. Anytime they want us to get contribution margin, we normally take the price minus variable cost. So selling price per unit minus variable cost per unit. Ladies and gentlemen, I would want to see whether there is any student who has already understood this thing once and for all by us doing example 1. Example 1, we are told product X has a variable cost of 2 per unit and a selling price of 6 per unit. The fixed cost is 1,000 per year. If budgeted sales and production are 300 units, what is the budgeted profit or loss for the year? So I would want to give you exactly 2 minutes. 2 minutes, please give me the answer to number 1. Give me the answer to number 1. Give me the answer to number 1. 200, 200. Great. So, ladies and gentlemen, I can see most of them are getting 200 bob. They're getting 200 bob as the profit to be realized. Let's see how truthful is really that. How truthful? Is that really a truthful figure? Is it a truthful figure? Let's see. So, ladies and gentlemen, let me share my book with you here. Where are we? We are there. So they've told us that the product has a variable cost of 2. And the selling price is how much? The selling price is 6. The fixed cost is 1,000. Whenever I see those parameters, ladies and gentlemen, what I'll be able to remember very fast, what I'll be able to remember very fast will be this. The formula that I was taught in CPA section 4 sometimes back. This simple formula that I was taught in CPA section 4 sometimes back very first. What I'll remember is this, that to get profits, my great students, to get profit here, we normally talk over whenever I see price, variable cost, I see quantity. So to get profit, what I will do is to come and talk of P minus V multiplied by quantity minus fixed cost. So to get profit is our pi. Pi, which is 22/7 in high school. We used to say pi was 22/7. Now here our pi is no longer that 22/7. It's no longer 3.14. Our pi is profit. In business, pi stands for profit. And once I have my profit like that, my profit here will be contribution margin. P minus V is contribution per unit times number of units here for us to be able to get total contribution minus the firm's what here? Fixed cost. So, ladies and gentlemen, here they have already given me the price. They've told me the selling price is 6. They've already given me the variable cost. They've told me that the variable cost in this regard, the variable cost is 2. The variable cost is 2. So 6 minus 2 times, don't forget that X is the quantity. And the quantity they have told us vividly, what quantity are we going to sell? The quantity we're going to sell, ladies and gentlemen, the quantity we're going to sell here is 300 units. The quantity we're going to sell here is 300 units. So times 300 minus the firm's fixed cost. Ladies and gentlemen, the firm's fixed cost happens to be what here? The firm's fixed cost, we are told up here, is 1,000 per year. Is 1,000 per year. And that is why most students were able to get 1,200 minus 1,000, which gave you guys what figure? Which gave you guys a figure of 200. Thank you, and thank you very much. Now look at part B. Part B, they want us to give them the break-even point in units. So how do we get the break-even point in units? Very simple. To get the break-even point in units XBE, we normally take fixed cost of a contribution margin. The fixed cost, ladies and gentlemen, that we have here, is 1,000. Contribution margin is 6 minus 2. So can somebody tell me how many units am I going to sell to break even? So I'm being told it's 250. Thank you very much, Timothy. Thank you very much, everyone who has already gotten me that figure. Ladies and gentlemen, before our ink dries up, they still want us to go ahead and determine the break-even revenue. From the information given here, could you kindly give us the break-even revenue? You can see what Mary Njoroge has. She has a figure of 1,500. The break-even revenue, according to Mary Lokai as well, 1,500. Break-even revenue, ladies and gentlemen, what do we have here? For us to get break-even revenue, there are so many ways. Remember, revenue generally, it is price times quantity sold. Revenue is price times quantity sold. So if they want us to give them revenue at break even. Then I will take the selling price of 6. The selling price is 6 times quantity to be sold for us to break even. Quantity to be sold for us to break even is 250. Quantity to be sold for us to break even is 250. And that is how these great students of mine are able to get 1,500. That is what they did for them to get 1,500. 1,500. Could we be having any student here who used a different formula but ended up getting that figure? Is there any student who used a different formula but ended up getting this figure? Yes, yes, there are many ways, ladies and gentlemen. One of the ways that I would imagine that some students could have used is this one, which tells us that revenue break-even equals fixed costs over CMR. Very powerful tool. Very powerful tool, yes. Revenue break-even equals fixed costs all over CMR. Revenue break-even equals fixed costs all over CMR. Fixed costs all over CMR. Ladies and gentlemen, if you're writing this, could you kindly tell us that CMR is contribution margin ratio? CMR is contribution margin ratio. CMR is contribution margin ratio. Contribution margin ratio. It is also known as the CS ratio. It is also known as the CS ratio. CS stands for contribution to sales. CR stands for contribution to sales. CS stands for contribution to sales. The question that I would want to pose to you, greatest students of mine, is how do we get this CMR? To get CMR, ladies and gentlemen, we normally take CM over what here? Over price. To get CMR, we normally take CM, which is contribution margin, contribution per unit divided by selling price. Contribution per unit divided by selling price. Contribution per unit divided by selling price. In our case here, ladies and gentlemen, we've just been made to understand and learn that to get contribution margin, we normally take price minus variable cost. We normally take price minus variable cost. So selling price is 12. Not 12. Selling price is 6. Variable cost, you're the ones who gave me a figure of what here. Is it 2 or 4? What is the variable cost? What is the variable cost? What is the variable cost? Can somebody remind me? The variable cost in the question, according to Olivia, is 2. All over price. What is the selling price? The selling price, ladies and gentlemen, already I have it from somewhere. I know that the selling price here is 6. The selling price is 6. So then, ladies and gentlemen, this boils down to 4 over 6. So 4 over 6, could you kindly give me this answer? 4 over 6 will end up giving me what figure? 4 over 6. I would rather, if it's recurring like that, I would rather just leave this as a fraction, 2 over 3. 2 over 3. So that as I come here, I know my fixed cost is 1,000 all over 2 over 3. As I'm dividing, that 2 over 3 must be put in brackets. The 2 over 3 must be put in brackets. So 1,000 divided by, open brackets, 2 over 3 close. 2 over 3 close. And then you give me an answer. 2 over 3 close. And then you give me an answer. What do we have there? So Mary, again, confirming her figure that she had gotten earlier on of 1,500. Her earlier figure she had gotten earlier on of 1,500. Thank you very much. Thank you very much. So there are 2 ways which we'll be using to get contribution margin, or rather to get revenue break-even. Revenue break-even. I hope up to there we are clear. We are clear. Of course, as much as I'm trying to teach quite fast to finish like a topic because of our shortened training period,
Should you feel that I'm too fast, don't forget to simply raise your hand and say, hey, 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 slow down, hey, 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 slow down. Because the objective really is to have maximum impartation of knowledge here. Yes, so let's go to the next thing. The next thing that I would want us to do, ladies and gentlemen, is here. How many units need to be sold to achieve a target profit of 300, a target profit of 300 per year. I would want to see whether there is any student who will be able really, let's see whether there is any student who will be able really to give us an answer there. Is there any student who will be able to give us an answer? According to Lokai and Mary, they're giving us 3. I don't know where they're getting the 325 from, but that seems to be correct. Is there any student, a third student, who will be able to confirm that really this 325 figure is very correct, is very correct, is very correct? Who is able to confirm that this figure is correct? Is there anybody who can make such kind of an affirmation, confirmation? Is there anybody who can confirm that? Thank you very much, Caro. Great. Now, ladies and gentlemen, to get really the number of units here needed for us to be able to achieve some targeted profits, there are so many ways that I could make use of to ascertain that. There are so many ways I could make use of to ascertain this. Now, the very best being the quantity for any targeted profit, now not for break even. The quantity for any targeted profit should be fixed cost plus the profit that you are targeting. Fixed cost plus the profit that you are targeting. All over contribution margin. All over contribution margin. So whenever this examiner speaks about quantity needed for us to be able to break even, always think about this, the fixed cost that we need to cover, because fixed cost recovery is the first thing towards what here? Profitability. You can't say really that you are making profits before you cover your fixed cost. So first of all, we cover fixed cost and then we go to profit that we want. So in this particular case, our fixed cost to be covered, ladies and gentlemen, in this particular case, our fixed cost to be covered is 1,000. Is 1,000. The fixed cost, we're given the fixed cost up here. The fixed cost is 1,000. The fixed cost is 1,000. And the profit that they are targeting, the profit they are aiming to get here is 300. Is 300. The profit they are aiming to get is 300. So plus 300. And then everything to be divided by contribution margin, whose formula is price minus variable. Whose formula is price minus variable. So it will be 6 minus variable of what here? Variable of 2. So then this will give me 1,300 divided by 4. 1,300 divided by 4. Could you kindly confirm that these beautiful ladies who gave us figures there were correct? Were they correct or wrong? Were they correct or wrong? Were they correct or wrong? 325 is what they got. 325 is what they got. Now, ladies and gentlemen, if they are confirming that whatever was gotten up there, correct, thank you very much. Correct, correct. Even Violet had gotten the same figure. Now see margin of safety. What are they telling us about margin of safety? They're telling us that the margin of safety measures the percentage fall in budgeted sales that can be allowed before break-even is reached. I like that definition. Ladies and gentlemen, margin of safety, what we call MOSMOS, margin of safety, represents, of course, for you to be safe, you must be at a profit zone. So profit is up there. We have our break-even point here. So the margin of safety represents that particular percentage fall in our quantities to be sold, for us to have our profits moving from up there to break even point. To break even point, the bigger the fall is, the better. The bigger the MOS is, the better, the better. Because if you are straight away at break even, if you're operating at exactly break even, then you are walking on a very thin line. A thin line, in this case here, a thin thread. Should it, in this case here, decide to go into two equal parts, you go straight away into losses. You go straight away into losses. So, ladies and gentlemen, this is what we have. They're telling us that margin of safety measures the percentage of percentage fall in budgeted sales that can be allowed before break even is achieved. So, ladies and gentlemen, if that is the case, then I would want us to appreciate one point. If that is the case, I would want us to appreciate one point. They want us to give them the margin of safety. The margin of safety. So in this case here, margin of safety, we normally take the X targeted or budgeted. The X targeted. What are we targeting? What quantity are we targeting? What quantity are we targeting to sell in a particular period? Right? Minus the break-even quantity all over the break-even quantity times 100, times 100. So this is a very important formula to be memorized. If you can't memorize it really, you'll get yourself into problems. Over targeted quantity. Sorry for that. Over targeted quantity here. Over X targeted. Sorry for that. Over X targeted or budgeted. So then they want me to calculate, the margin of safety for example 1. For example 1. Margin of safety for example 1. Is there anybody who will be able to give me this margin of safety? Margin of safety for example 1 in percentage form. In percentage form. Is there anybody who will be able to give me this margin of safety in percentage form? Remember, ladies and gentlemen, that this margin of safety of ours, no, I have to give you 1 minute. I would want to get these answers here from you. Please, I'm giving you exactly 1 minute so that I can get some answers from you. Margin of safety is X that you're targeting, the quantity that you're targeting to produce or to sell, minus X break even all over 23.08. So the X targeted in part 1, ladies and gentlemen, is 300 units. That is what they are targeting to produce and sell. Minus X break even, could you kindly give us the break even quantity? The break even quantity, to obtain the break even quantity up there, if I remember very well, the break 250 all over the bigger times 100. So could you kindly give me this margin of safety? I can see Margaret has come up with slightly a different answer. Slightly a different answer. Olivia has come up with 23.08, with some students up there were able to give us. How about the other students who have decided to mute, to go quiet? I can now see 16.67 is coming up very well. I can see 16.67 is coming up too much. Remember also at the back of the book, you have answers. At the back of that book, you have answers. If, ladies and gentlemen, you have been able to print out. So it's like everybody is agreeing that our break-even point is supposed to be 16.67. The ones who are getting 23, I want to believe they're making the same blunder that I almost made. I want to believe that here they use 250. I want to believe down there they use 250 instead of budgeted sales. So is there any student who has any question as regards the margin of safety? Any question? Any question? Any question? Now mention there CVP analysis dash multiple products, CVP analysis dash multiple products, CVP analysis multiple products. So the question will be, how about organizations that are selling many products? How shall we be handling them? How shall we be handling them? How shall we be handling them? Ladies and gentlemen, here we are. We are given just a straightforward example. So a company produces and sells 3 products, C, V, and P. The budget information for the coming year is as follows. So you can see the sales, you can see the selling price, you can see the variable cost, you can see the contribution per unit. The total budgeted fixed overheads for the year are 8,000. So they want us to calculate the CS ratio for each product individually. Calculate the CS ratio for each product individually. If my memory serves me well, we said that the CS ratio is the same as CMR ratio. It's the same as CMR ratio. So I would want you to take like 2 minutes exactly to compute the CMR ratios for each of those products. 2 minutes exactly. What are they able to get here? So, ladies and gentlemen, calculate the CS ratio for each. Thank you. Thank you. Great. So the CS ratio for each of the products. So the thing is, we have to remind ourselves, how do we get this CS ratio? To get the CS ratio, 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 ladies and gentlemen, CS ratio, ladies and gentlemen, this is the same as CMR. It is contribution margin over price. So we have our three products here, CVP. The only thing you need is to take the CM versus the price, and then you get the quotient. So the CM that we have here, the CMs that we have been given here expressly, the CMs we have been given here, we have here is 1.25. Here is 0.75. Ladies and gentlemen, here we have 2.65. 2.65. And then the prices up there, I can see 5, I can see 6, I can see, ladies and gentlemen, ladies and gentlemen, ladies and gentlemen, ladies and gentlemen, I can see 7 as well. So we have a 7 here. We have 7 here. So the only thing I need you to do is to come and create another row for capturing the CS, for capturing what we are calling the CMR, where we are saying that the CS, all you need to do is to come and take the contribution margins divided by the prices, So could you kindly give us these figures, my greatest students here? Talk of 1.25 divided by 5, please give me an answer. 1.25 divided by 5, 2 decimal places. What do we have? 0.25, thank you. How about 0.75 and 6? 0.75 vis-a-vis 6 here for V. For V, what do we have? Somebody, 0.13. The last one is 2.65 divided by 7. Divided by 7. So this gives me 0.38. Thank you. 0.38. Thank you, and thank you very much. So that is what we were required to do in Roman 1 to get the CS, for each of our products. Now, straight away, let's go to the second requirement. The second requirement, ladies and gentlemen, is where they want us to calculate the average CS ratio. Average CS ratio. So how do we get average CS ratio? Ladies and gentlemen, remember that this average CS ratio, the average CS ratio, so ukisikia average CS ratio, this is the same as the weighted average contribution margin ratio. So what are we saying, ladies and gentlemen? We have average CS is weighted average contribution margin ratio. WACMRI. And for us to be able to get this WACMRI thing, I hope you've been able to write this down, WACMRI thing. For us to be able to get the WACMRI thing, we have got very many ways of getting this WACMRI thing. The WACMRI, weighted average contribution margin ratio, we've got weight 1, contribution margin 1, plus weight 2, contribution margin 2, plus weight 3, contribution margin 3. Very important for us to appreciate this. Weighted average. And then remember that our weights are basically our sales mix. So the moment you have your sales, units, then you would easily get the weights. Ladies and gentlemen, remember there is quite a lot of strength in selling. There is quite a lot of strength in doing what here? In selling. Quite a lot of strength in selling. It doesn't matter, I mean, how much price, how much in terms of price, a product will fetch you if you are not able to do what? If you are not able to sell. If you are not able to sell, it doesn't matter what amount your product has at the shelf. It's all about selling. Even if it's just a sweet and I'm making even a penny as my profit, provided I'm able to sell more, the better off I will be. That product that sells more has always a bigger weight, in our sales compositions. So then for us to be able to get the weights really, what I would need, yes, I'm able to see the sales units up there. I'm able to see the sales units up there. I'm able to see 4,800. I'm able to see 4,800 here. I'm able to see 12,000 as well. So could you kindly then come and give us the total? Could you kindly come and give us the total there? Kindly give us the total there. Please give me the total because I would want the weights. I would want the sales proportions. So somebody gives me 21,600. 21,600. Meaning, ladies and gentlemen, that the weight of S will be 48. 48 will be 48 out of what here? Out of 216. This as well will be 48. 48 out of 216. This will be 12 or 120 out of 216. So what I've done is to chop off the 2 zeros like that. So please come back here to our workmemory thing. Our workmemory thing here, what do we have, ladies and gentlemen? We have weight 1. Weight 1 here is 48. 48 over 216 times contribution margin 1, which is 1.25, plus weight 2. Weight 2 is 48 over 216 times contribution margin 2. Contribution margin 2 is 0.75. 0.75 plus weight 3, which will be 120 all over 216 times contribution margin 3, which is 2.65. Please give us a figure to write down. Give us a figure to write down. Workmemory. Workmemory is quite an interesting thing, which we have to be very careful with because I've seen it messing so many students, this workmemory thing. And workmemory is basically applicable to organizations, or rather in this particular case, workmemory is applicable to organizations that are producing many types of products. That's where we are talking about attaching weights to each of those products, weights which have an association, every association to do with what you are selling, to do with selling. So can somebody give me this workmemory? Somebody give me this workmemory. Somebody give me this workmemory. What do we have, ladies and gentlemen, as my workmemory? 2 decimal places will be sufficient, or say 3. 3. Say 3. What do we have here as our workmemory? Somebody. They're not talking to me. They're not talking to me. They are not talking to me. So you go slowly, 48 divided by 216. So according to Samsung, he's getting 1.92. Is there somebody who is able to support the Samsung man? 1.917, 1.92. Remember, the more the decimal places, the safer you are. The more the decimal places, the safer, the margin of safety you have. But because you have, all of you have insisted, let's work with 1.what here? 1.92. Ladies and gentlemen, that is not really the method that I came to sell to you here today. No. To you here today, the method that I came to sell to you for getting workmemory is this other formula, which happens to be the strongest of them all, which I would want all of us, ladies and gentlemen, here to memorize. So, ladies and gentlemen, this formula is very easy. what they want us to do is basically to give them the CS, the weighted average CS. So to get this weighted average CS, weighted average contribution to sales ratio, or weighted or WACMRI, one and the same. To get this, ladies and gentlemen, what you need to do is to come and use this formula that you'll never forget, whereby to get the WACS, what you need to do is to come and give us total contribution over total sales. 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 So I would want you to do me a favor. Remember, sales is money. Sales, shillings. So I would want somebody to give me to do me a favor here. This sales is the same as revenue. I would want a good student to come here confidently and calculate for us the sales revenues. Remember what you are told in quantitative analysis. To get sales revenue, we normally take price times what here? Price times quantity. To get sales revenue, we normally take price times. So please go ahead and give us the sales revenue for the first product. So I've given you a hint that to get sales revenue, we normally take price times quantity. We normally take price times quantity, price times quantity, price times quantity. So we have the price here and we have the quantity here. We have the price here and we have the quantity there. So 5 times 4,800. 5 times 4,800, 24,000 according to Lokai. Thank you very much. So in this case here, the sales for CVP. So Lokai tells me that C is 24,000. How about V? There's nobody who has given me the sales revenue of V. Please give me the sales revenue of V. Please give me the sales revenue of V. Hilda gives me 28,800. Hilda gives me 28,800. How about P? Last one. Thank you very much, Lokai. I can see an answer. So the last one is 84,000. So I would want someone to come and create a column by the side here and call it total. Create a column by the side there, and then you call it total. So you're supposed to take this plus this plus this, you give me an answer. You take this plus this plus this, give me an answer. Give me an answer. Give me an answer. What do we have there? The total of them all. So according to Lokai, we have 136,800. Thank you very much, Olivia. 136,800. Now, the other thing that I would want you to come and do very fast for me is the total contributions. So the question will be, what do you think shall we do for us to be able to get the total contributions? What do you think shall we do for us to get the total contribution? To get the total contribution, what do you think shall we do to be able to get the total contribution? I know what we shall do. What we shall do is to come and take contribution per unit times number of units. Contribution margin times quantity. So here we have contribution margin times quantity. Unfortunately, ladies and gentlemen, I have rubbed my contribution margin somewhere here. But if there is something that I'm able to remember, is the contribution margin of X, which was 1.25. Contribution margin of X, which was 1.25. So 1.25 times the quantity, which again is 4,800. Could you kindly give me an answer slowly? And if you're not able to follow, please tell us. Please tell us. Please tell us. Please tell us. So you're getting the total contributions. How do we get these total contributions? It's very easy. I have contribution margin. Contribution margin is the same as what here? Contribution margin is the same as contribution per unit. So C, according to Lokai, C is 6,000. 6,000. She's taken 1.25 times 4,800. How about V? How about V? Please, let's concentrate. Let's concentrate and finish this class in style. In style. All of us have to concentrate. All of us have to concentrate. So I can see from so many students telling me that, like Violet, that V should be 3600, 3600, 3600. How about P? How about P? Kennedy. Violet, thank you very much. 31800. So please participate. Zoom is all about participation. If you want to pass very easily using this Zoom technology, the best thing, even if, ladies and gentlemen, there is nobody who is talking, just throw in something. Doesn't matter. Just throw in something, even if you are wrong. So what? Doesn't matter. So could you kindly come and give us here the total contributions? Please add for us. Add for us. What do you think in this case here will be the total contribution? Total contribution. How do you get that? Here, contribution per unit times quantity. So contribution per unit, for example, we have for C, it's 1.25. Quantity sold is 4,800, Sylvia. If you do it this way, you're able to get that. Confirm, Sylvia, whether you're able to see that. I hope you have the book. I hope you have the book. Okay, great. Thank you very much. And I've seen somebody giving me the total contributions to be 41. Is it 41,800 or I saw my own things? 41,400. Thank you very much. 41,400. Now, the moment I've gotten this, now I can comfortably get the combined CS ratio. I can comfortably come and give them the combined CS ratio, the combined, or basically the average CS ratio, the average CS ratio, or the average Wakamuri like that. So how do I get this? I will come and take CS is contribution all over sales. So now we work with the totality. So contribution, ladies and gentlemen, that we have here is 41,400. Divide this by 136,800, like that. So you take this all over sales revenue, and then you tell us whether you are able to see the figure that we got using the figure that we got using the other method. Please confirm to us. 0.30. Lokai is giving us 0.30. Any other person who is able to get a number? 0.303. 0.303. Margaret, 0.30. How about the other method? The other method gave us what answer? Who is able to remember the other method? The other method gave us what answer? The other method. Now we're looking at the other method. It gave us which answer? 0.3? I doubt. It can't be 0.38. 1.92. The other method gave us 1.92. How about this one? Where have we gone wrong? Where have we gone wrong? How about this one? The CS ratio. Is there somebody who is able to pick the figure? The figure, because I know it must be. Because like now contribution here, 1.25 times 4,800. 1.25 times 4,800. What figure do we have? Just check again your figures. Check your figures for contributions and the sales. Check your figures for contributions and the sales. Check your figures for contributions and the sales. And then we see where we've gone wrong. $6,000. Where is this 6,000? Somebody is saying that this 6,000. So just check. Remember, So calculate the average CS ratio, assuming that the budget, let me repeat very fast. Now, okay, let me repeat this thing very fast. Let me repeat this thing very fast. Let me repeat this thing very fast. So the answer that you have gotten here is correct. The answer that you have gotten here is very correct. This can never be wrong. The answer that you got here can never be wrong. The answer that you got here can never be wrong. You've told me it is 0.303. The answer you got here can never be wrong. Now let's get back to the other method. If you're saying that these totals are correct, then the other method is the one that is what here that is wrong. The other method that you got is the one that is wrong. Now, ladies and gentlemen, listen. The figure that we got somewhere up there, you know, we want to get WACMR. So to get WACMR using method 1, let me call this method 1. Let me call it method 1. Now, for us to be able to get, ladies and gentlemen, CMR, I mean using method 1, what I'm supposed to do here is to remember the formula that CMR is the same as CM over price, is the same as CM over what here? Price. But now remember that they want us to give them WA. So it should be WACM over WAP. And of course, the very first thing that we need to do is to come and calculate the WACM. But now the question is, how do I get this WACM? So to get WACM, we take weight 1, CM1, plus weight 2, CM2, plus weight 3, CM3, like that. Now, ladies and gentlemen, weight 1, what are we supposed to be having here for weight 1? Weight 1, you are the guys who gave me the figure. If I remember well, weight 1 was 48. 48 divided by what here, somebody? 48 divided by 216. Times contribution margin 1. Contribution margin 1 has been given. Contribution margin 1 has been given. Contribution margin 1 has been given. Contribution margin 1, ladies and gentlemen, contribution margin 1, it's here. It's 1.25. Contribution margin 1 is 1.25. 1.25. The second weight again is 4,800. 48 over 216 times contribution margin 2. Are you able to see the contribution margin 2 really? Contribution margin 2, ladies and gentlemen, I can see here is 0.75, 0.75, 0.75, 0.75. So times 0.75, 0.75 plus 120 over 216. 120 over 200. 120 over 216 times 2.65 times 2.65. Before I answer that, student, could you kindly give me this figure? Kindly. 2.65. Kindly give me this figure. What is this supposed to amount to? What is this supposed to amount to? So where I got the 216 from, if I come back here, this 216, where did I get it from? I want to get the sales proportions. So the sales proportions, for me to get these sales proportions, I need to come and take this plus this plus this. If you add them, you'll get 216,000. So and then if you cut the two zeros, this will be 480.48 divided by 200 divided by 216, like that. So please check whether you are able to understand that concept really. So Lokai gives me the final answer here. Somebody else will be able to confirm. Someone else, even Mary Njoroge, has been able to get that 1.92, yes. But now I want a third person because I don't want us to goof. I don't want us to goof anywhere. I don't want us to goof anywhere. I don't want us to goof anywhere. So I would want a third person to go ahead and give us this figure. Olivia 0.296, I doubt that figure, unless you're giving me the final figure. Now, after getting this WACM, I also discovered that we need the WAP. So the question is, how will we be able to get this WAP? To get WAP, I'll take weight 1, price 1, plus weight 2, price 2, plus weight 3, price 3, like that. Like that. So, ladies and gentlemen, if that is the case, fortunately, already we have the prices. Already I can see the price of C is 5, the price of V is 6, the price of P is 7. And then the weights are the same. The weights will remain the same. The weights will remain the same. The weight will remain the same. So then the question here that I have, how will I be able now to do the attachments here? So weight 1, what do we have here? 48 over 216 times 5 plus 48 over 216 times 6 plus 120 over 216 times 7. Could you kindly give me the final answer? Kindly give me the final answer for the WAP. WAP is very important whenever we're getting work with it. Actually, I'm tending to think that we made a mistake. We never computed the WAP. We did not compute the WAP. So somebody gives me, Mary Njoroge gives me 6.333. 6.33. And then if you want to know that we are correct in both methods, save for rounding off errors, come and say here the WACM is 1.92 over 6.3333. Just try doing that. And then you give me the answer for our weighted average contribution margin. Ah, great, great. I can see what Mary Njoroge is getting. But unfortunately, she's the only one who is able to get it right. Unfortunately, she is the only one who is able to give me a figure. She is the only one who is able to give me a figure. So 0.303. So is now this answer in agreement with the other answer that you got using the second method? Is it in agreement? Thank you. Great. Now, ladies and gentlemen, I would want you to do me a favor. I would want you to come and do part C for me, where they want us to calculate the break-even revenue. Just try part C yourselves.
Let's see what answers they have. 26,403, 27. Break-even revenue, Timothy Karuti gives us 26,400. Who's right? Who is wrong? Let's compare notes. Let's see. Let's see. Let's see right away. Now, ladies and gentlemen, so, ladies and gentlemen, let's see. What do they want us to give them? Number one, they want us to give them the revenue break-even. So to get revenue break-even, ladies and gentlemen, the only way out is to use the WACM method. WACM method. So WACM method will come and give us X break-even. So first X break-even. So X break-even here, because there are three products, I'll talk of fixed cost over WACM, which will end up giving me what figures, ladies and gentlemen? So fixed cost, fortunately, I have the fixed cost of the farm. The fixed cost of the farm has been provided. The fixed cost of the farm has been provided. The fixed cost of the farm has been provided. It is 8,000. Fixed cost here is 8,000. All over WACM that we had obtained in part 1 above, who is able to give us the WACM. Remember, not WACMRI, but WACM. So WACM, who is able to give us that W? Is it the 1.92? 1.92. So then could you kindly go ahead and do the division? 8,000 divided by 1.92 will give us what figure? Will give us what figure? 8,000 divided by 1.92 will give us what figure? Somebody. 8,000 divided by 1.92. Remember, these questions are all over in your past papers, all over, very popular. So Mary Njoroge gives us a figure of 4166.67 units. Thank you, ladies and gentlemen. So after getting these, the second step now is to come and monetize these. So let's put money into these. So how do we monetize these? By taking this quantity and then multiplying it with the price. So in this case here, to monetize these, our revenue break even will be equal to price times quantity break even. Quantity break even. But now, ladies and gentlemen, remember for sure that we don't just have one price here. These are multiple product scenario. It's a multiple product scenario. So you have got many prices, and as such, you can only work with an average price. As such, you can only work with a WAP. So WAP times X break even. So I would want to know whether there is any student who is able to remember the WAP, because there are many prices here, would want to work with an average. There are many prices here, would want to work with an average. So is there anybody who is able to remember the WAP? Is there anybody? 6.333. Like that. So this is 6.333 times 41, 66.67, like that. So could you kindly give us this answer? Kindly give us this answer. Kindly give us this answer. So kindly give us this answer. Kindly give us this answer. Give us this answer kindly. 26, 375. That is Lokai. Is there anybody who has a different answer? Margaret, the same. Margaret, the same. Thank you. Thank you. Thank you. Now listen. Another student may have thought of doing this question using a different approach. Let's save that answer.
There are so many ways of doing this. There are so many ways of doing this. Another student will tell you that X break even use Wakim for X break even. But in this case here for revenue break even, use WACMURI. So in this case here, what do we have, ladies and gentlemen? If it's WACMURI, method number two, my revenue break even method number 2 will be equal to fixed cost over WACMURI, like that. Fixed cost over WACMURI. So the fixed cost, ladies and gentlemen, the fixed cost remains. The fixed cost, ladies and gentlemen, that we have here, the fixed cost is 8,000. 8,000 divided by our WACMURI. Our WACMURI was what here? Somebody who can remind us this figure. Our WACMURI was 0 point something. WACMURI. We got WACMURI up there. It was 0 point something. The WACMURI we got, it was 0.3. So could you kindly do the division for us? 0.303. Could you kindly do the division for us, and then you advise us? Can someone take this divided by this, and then you advise us kindly? And then you advise us kindly, and then you advise us kindly. Can someone do that division for me? And then tell me whether there is anybody who is able to get an answer that is quite close to what we had obtained using the other method. 26, apart from rounding off errors, apart from rounding off errors, the answer that we are getting here, ladies and gentlemen, has to be very close, to the other method, Method number three. Method number three is a very interesting one. I like it. I like method number 3 more than any other method. I like method number 3. Are our answers close between the two methods? The answers you've gotten using the two methods, are they quite close? Are they quite close to each other? Yep. Thank you very much, ladies and gentlemen. Now here we are. The other method, which is method number 3. So this method number 3, very popular, is the split of the break even, the split of the X break even into the various products. The split of X break even. We split the X break even. So I would want us first of all to remind ourselves, what is the X break even point? The X break even that we got ourselves here. X break even, what do we have here for X break even, ladies and gentlemen? X break even, what do we have for X break even? Please remind me. We got X break even up there. We got X break even up there. $41.66.67. So please let us apportion these to 3 products. Our 3 products here are a CVP like that. Let's apportion these. And remember, we shall apportion these using our weights. So the weights here we have 48 over 1, was it 120? Can't remember very well. The weight, I can't remember very well. I don't seem to remember this very well. Should be 48 over what? The weight should be 48 over 216, yes. Over 216, yes. So 48 over 216. How about the last one? The last one is supposed to be 120 over 216. So could you kindly subdivide this for me and give me answers? So you simply take here times this. You give me an answer into 2 decimal places. 2 decimal places. So please advise me. 2 decimal places. You take this quantity divided by this. You give me the quantity for C. Like now for May 2016, this is how it came. Where they told you to get X break even, and then you subdivide it into the various products. You subdivide it into the various products. Subdivide it into the various products. Subdivide it into the various products. Somebody, Nicholas, please give me the first figure. Timothy has given me 92.59. 92.59. Please go to V. Go to V. V, what do we have here for V? 925.94. 925.94, that is V. And then Z, not Z, but P. P, the last one is P. Last one is P. Or you want to mean that C is 925.93. 925.93. Thank you. So how about V? $23. Please write the name of the product. Write the name of the product. Write the name of the product kindly. Write the name of the product. Is it V or P? So P is 2314. 0.82. How about V? How about V? How about V? V is supposed to be V. How about V? Is there somebody who has been able to get the one of V or the same? Oh, the same, like that. So these are quantities. So what you need to do is to come and monetize them by multiplying them with their respective prices. These are quantities, monetize them by multiplying them with their respective prices. Unfortunately, we have the prices. Fortunately, we have the prices. Fortunately, we have the prices. Fortunately. Five, 6, 7. So please give us answers. Please give us answers. Please give us answers. Give us answers. And then if possible, come and add for us everything to get for us the total. Just give us the total. Add up everything, and then you happen to just give us the total, and that is it. The total. Just give us the total. Just give us the total. Give us the total. Give us the total. Just add. So according to Mary Njoroge, she's getting a total of 26,388. 26,388. 26,388. Is there anybody else who is able to get that total? Yes. Is this total closer to the other figures we are getting? Is this total closer to the other figures we are getting? Is it closer? Is it closer? Yes. So then, gentlemen, I want to take this opportunity to thank you. It has been a pleasure hosting you for the night. Allow me to hit the road before the curfew. I normally fly. Bye-bye.